In this video, well, we've got so much to discuss, it's a joke. Amazon has announced a 20-for-1 stock split, which will leave Tesla stock as the most expensive mega cap stock in the marketplace. Does this mean another Tesla stock split will be around the corner? More Starlink terminals have been delivered to Ukraine, along with Tesla Powerwalls and solar. Plus, Tesla offers Ukrainian employees 3 months paid leave if they're fighting in the Ukraine-Russia conflict. The Short Seller Enrichment Commission, the SEC, whatever they're called, is set to pay out over $40 million to early Tesla stock investors. Invites for the Giga Berlin customer delivery event go out. Morgan Stanley has some thoughts on how the Russia-Ukraine conflict will affect Tesla and the wider EV market. Tesla takes out the #1 spot for luxury vehicles in the United States for the first time. And SpaceX trolls Russia on their latest live stream. Seriously. So let's get into it. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can get 2 free stocks with WeBull, a free stock with Stake, free Bitcoin with Coinbase, and free Bitcoin with BlockFi, and the BlockFi Bitcoin Rewards credit card. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support. First things first, Amazon announcing a 20-for-1 stock split today, plus a $10 billion share buyback. Obviously, Amazon has way more money than they know what to do with, hence the share buyback. An interesting comment here too. This is the first stock split for Amazon since 1999, before many of you were born. In fact, let me know in the comments below who was born after 1999. And this is the 4th stock split in the history of Amazon since their IPO in 1997. The stonk market appeared to like the news. Amazon stock rocketing up over 6% after hours. Meanwhile, Tesla stock had a great day during hours, up almost 4.20%. As Gary Black points out on Twitter here, quote, Amazon has announced a 20-for-1 stock split subject to shareholder approval, which is a no-brainer. Of course, shareholders will approve this at the May 25, 2022 annual meeting. Google is also splitting its stock 20-for-1 effective July. This will leave Tesla as the highest priced mega cap stock. Of course, a stock split should have no meaningful impact on the market cap of a company. After all, nothing fundamental is changing. It's just how much investors can pay for a single share of the stock. But history suggests there sometimes is a fairly positive impact. One example, of course, is Tesla stock. Now keep in mind, there was a million other things going on. I'm not suggesting that the stock split was the sole reason or even the primary reason, but just out of interest, let's see what happened when Tesla stock split was announced. Tesla stock rose 81% from the day it announced its 5-for-1 split until the split became effective 20 days later. Out of interest, let me know in the comments below, at what price do you think Tesla should split their stock again? When the dust settles with the Google and Amazon stock splits, they'll each be around $130 per share based on today's prices. Tesla could be around $1,000 per share. Now onto some great news from the Vice Prime Minister of Ukraine, quote, received a second shipment of Starlink stations. Elon Musk keeps his word. Thank you for supporting Ukraine and peace in the entire world. We see here a shot of the delivery vehicle with the Starlink terminals arriving in Ukraine. Elon Musk responding to this, quote, you're welcome. We have also sent power adapters for car cigarette lighters. If you haven't heard, Starlink made some over-the-air updates recently enabling the terminals in Ukraine to be operated in a car and powered from a cigarette lighter. Amazing. In addition, and this is very important, Tesla has also sent, quote, solar/battery packs and generators for places where electricity is not available. Curiously, Tesla makes solar and battery packs. You know what they don't make? Generators. This is wonderful to see. Elon and or SpaceX and or Tesla dipping into their own pockets to help out the people of Ukraine in a big way. More on Ukraine and Tesla, quote, Tesla will pay Ukrainian employees for up to 3 months if they are conscripted to fight. By the way, congratulations on CNBS for breaking this story. Credit where it's due. An internal email obtained by CNBS outlines steps Tesla is taking to support Ukraine. For instance, Tesla will keep Ukraine employees on payroll for at least 3 months if they're called back to the country to fight. The email also praised Tesla employees for helping SpaceX, Elon Musk's aerospace company, set up Starlink satellite internet service in the country. So curious. We can see here Tesla employees were directly involved somehow in the setup of Starlink in Ukraine. Here's the email. Subject, conflict support. As you know, Tesla is committed to do the right thing. Whilst the situation in Ukraine is evolving, we wanted to share with you what actions are being taken to support those impacted by the conflict. Many folks have reached out to understand how they can contribute, which is awesome. It's important we show them how we as a company are helping, what resources we have in place, and how they can also proactively support themselves. Big thanks to all of the teams that have contributed to these efforts so far. True Tesla spirit on display. The email goes on to talk about the 3 months of pay for anybody going back to fight in Ukraine. Tesla also offering free supercharging at stations bordering Ukraine to support people impacted by the recent invasion. And more juicy details, quote, Tesla teamed up with SpaceX to provide coverage expansion for its Starlink services to help provide an alternative internet infrastructure. So again, confirmation that Tesla employees were helping SpaceX with the Starlink service in Ukraine. Also information about how quickly the Starlink terminals were delivered to Ukraine, plus Tesla support in terms of energy, including power walls and solar, and some recommendations for ways employees can contribute if they feel like donating. You just love to see it. SpaceX and Tesla between them unquestionably have the world's best and brightest engineers. The fact that Tesla was able to say, hey guys, f Tesla for a moment, let's help out Starlink and SpaceX is amazing to see, means that the best people in the world were working on this problem. And now moving on to the SEC, the Suck Elon's. The Short Seller Enrichment Commission, following Musk's criticism, is ready to distribute funds from Tesla's settlement. Quote, the top US securities regulator asked a judge for permission to distribute $40 million to investors it obtained in a 2018 civil settlement with Elon Musk and Tesla that resolved a fraud charge and required Musk to obtain advanced approval for some tweets. Musk's lawyer had accused the SEC last month of having, quote, broken its promises by dragging its feet on the payout while trying to muzzle their client's speech and harass him with, quote, endless investigations into his conduct. Now, for those of you who don't really have the full background here, this is relating to Elon's famous funding secured tweet. He did believe funding was secured. This was a reasonable and honest tweet. He said he was considering taking Tesla private. The SEC lost their fucking mind, fined Elon and Tesla both each $20 million US. This fine, of course, is then to be distributed to the investors who are harmed so much by this dangerous tweet. Elon and his lawyers are actually currently fighting the SEC over this. That's a whole other discussion, maybe for another video. A word of warning though to the SEC, you don't want to be on the other side of the courtroom to Elon Musk. You will lose. Give it a few months and Elon and his lawyer will have brought the SEC to their knees, in my opinion. Back on topic. So in addition to the $40 million in fines, quote, a related consent decree also required Musk to obtain pre-clearance from Tesla lawyers for tweets and other public statements that could be material to Tesla. Musk believes the SEC has since, quote, weaponized the decree to stifle his speech as punishment for his criticisms of the government. On Tuesday, he formally requested to end the decree, adding that he felt pressured to accept it. Quote, I never lied to shareholders, Musk said in a court filing. Quote, I entered into the consent decree for the survival of Tesla for the sake of its shareholders. And this is relating to the settlement. Rather than fighting this in court, Elon's like, you know what, f it. This is going to be harmful to Tesla shareholders if this drags out. Even though I don't believe what the SEC is doing is right, I'm going to settle. I won't admit any guilt and we can just move on. Now that Tesla isn't in such a precarious situation, it's time for Elon to fight back and set things straight. Quote, payouts would go to investors who lost money in Tesla stock in the 1.5 days after Musk's tweet. So as far as I understand, investors who lost money refers to investors who own Tesla stock at any point in the day and a half after Musk's tweet, because Tesla stock was down temporarily. Of course, if they're not too dim, they probably still own Tesla stock, in which case I don't really think they were too harmed by these tweets. Sure, maybe they lost a tiny bit of money over the span of a few days or weeks, but where are we now? Like a 10x or more since this tweet? Well guys, I just had a quick look and I'm an idiot. Tesla stock actually up about 20x, about 20 times since this tweet that supposedly harmed all of these investors. Can't wait for the SEC to send me my compensation for making 20x on Tesla stock since the tweet. I'm obviously going to use it to buy more Tesla stock. A bit pointless, but in either case, it seems like anyone who owned Tesla stock during this period of time in 2018 around August is going to get a very, very, very small payout from the Suck Elon's cock. If only they'd been able to distribute this compensation for the supposed damages a little bit sooner, we could have reinvested in Tesla stock. So clap to the SEC for being so slow. But I think it's absurd, the very idea of finding Elon Musk and Tesla for sharing a thought about what he was thinking about doing, claiming that it harmed investors and you're taking the $40 million to compensate them, then taking 3+ years to actually give any money to anyone, seems a little bit odd to me. I told you we had a lot to get through in today's video. Next up, breaking news from none other than Sawyer Merritt. Quote, Tesla is officially sending out invites to Berlin employees for delivery day at Giga factory in Berlin on March 22nd. And here's the invite confirming. First deliveries will begin 22nd of March 2022. By the way guys, that's less than 2 weeks away. This is obviously cool news for people who can attend the event, but far more important than that, this is massive for Tesla stock investors. At fucking last, deliveries from Berlin. Only about 6, 7, 8, 9 months late, something like that. I've lost count amid the bureaucracy and red tape, but finally, at last, It's happening. Tesla is about to take over, slay, and absolutely dominate the European automotive market. And I'd hereby like to share my condolences for the German automotive industry, whose breakfast, lunch, dinner, and girlfriend Tesla is about to eat. Next, a new note from Morgan Stanley. Quote, Russia-Ukraine impact on oil prices. Short and long-term implications for EVs. Of course, this is through the lens of Tesla. They still have a $1,300 price target on Tesla stock. FYI, I just had a really quick look. My Tesla stock price target, bear case 2022, is actually $1,302. So we're pretty close, except I think there's a 5% chance for my bear case. Everything that can go wrong does go wrong. Morgan Stanley, however, think that $1,300 per share is just a reasonable likely scenario. I suspect when Tesla stock hits around that $1,100, $1,200 per share mark later this year, in my opinion, Morgan Stanley will be scrambling to upgrade their price targets again and again and again, and to justify higher volumes, faster EV adoption, higher margins, Tesla's total dominance, etc. Seems to be a recurring theme. When Elon Musk tells the world we need to drill for oil, you know the current fuel price situation is probably unique. The tweet of Elon Musk's they're referencing from a few days ago, quote, hate to say it, but we need to increase oil and gas output immediately. Extraordinary times demand extraordinary measures. Expectations for ICE may categorically outperform those for EV short term. We first want to say that the current geopolitical environment poses serious risk to growth and margins for the broader auto industry, both EV and ICE alike. Well, huge disruption to supply chain, products, materials. It's not going to be pretty. That said, relative to current expectations, we see more room for relative positive surprise near term, i.e. within this year, for sales and profitability of ICE vehicles versus that of EVs. Why? This is actually a good question. Inflation of EV prices. In isolation, higher fuel prices may improve payback periods for owning EVs, but when considering the inflation of input costs and their availability for electric vehicles, the payback periods may be diminished. The rise of the price of nickel alone over the past few days may add $1,000 to $2,000 to the cost to build a new electric vehicle. Let's talk for a moment about the kind of companies who will suffer the most if the cost of their materials and or parts increases by, let's split it down the middle, let's say $1,500 per vehicle. Instead of talking about all the companies who will suffer, let's talk about the one company who won't. Tesla. Why? 1. Tesla already has industry-leading profit margins on their vehicles, and I don't mean industry-leading in the electric vehicle space, I mean in the vehicle space, period. Tesla is making 2 to 3 times as much profit as many legacy automotive manufacturers are today. In addition, Tesla has been forced to raise their prices by 15-20+% over the past 12 months or so, just to ensure wait times for their vehicles don't blow out to absolutely ludicrous levels. Customers today ordering Tesla vehicles in many cases are waiting 6, 9, 12+ months to take delivery, and that's after the price increases. Tesla's products are so good they have to keep increasing the prices. Tesla's costs increase an extra $1,500 per vehicle. Maybe it means their enormous margins contract a tiny amount and they still have industry-leading margins. Or maybe they increase the price of their vehicles and they still have wait times of many, many months. In either case, this will have no meaningful impact on Tesla's business whatsoever. On the flip side, Tesla is one of the few companies today outside China who produce electric vehicles, then sell them to customers and make money. Yeah, I want to repeat that. Tesla is one of the few companies today outside of China who actually make money on the EVs they sell. Everyone else either isn't operating at sufficient scale to be making money, or their products are so bad that they have to sell them for such low prices because people compare to Tesla and go, well, the Tesla's the same price, it's way better, why would I buy this? That these companies are forced to sell their vehicles for massive losses just to sell any. These companies are in big trouble. If their costs go up per vehicle, unlike Tesla who has all of this flexibility, gigantic margins, they're making so much money in huge wait times, these companies are going to shit the bed. Do they increase their prices on vehicles that practically nobody's buying today anyway, that they're already losing money on? Or do they just suffer even larger losses and lose an extra $1,500 per vehicle on vehicles they're already selling at a loss? Doesn't end well. In short, Tesla will be a massive winner and everybody else is going to get absolutely reamed. A few further points. Supply constraints. EVs are great if you can get them and can afford them. Key here is versus expectations. Prior to the events of the past couple of weeks, many investors had very low expectations for the duration of ICE assets relative to EVs. We believe these expectations may be challenged and could even go the other direction in the short term. Clues from Rivian's price hike? Who's next? The Rivian price hike situation is a sign of the dramatic pace of input cost inflation into EVs. Hold up. Now, yeah, sure. In theory, maybe the $12,000 to $20,000 price increases, I don't know, around 15 to 20% on vehicle purchase prices is totally down to supply chain and costs increasing. But actually, I have a crazy theory here. I think some of the price increases actually have to do with Rivian realizing that production is hard. If they ever want to make money on their vehicles, they're not going to be able to sell them for the prices they originally intended. I'm sure that increasing costs and supply chain challenges have contributed a little bit to the price increases. But honestly, I think the majority of this is Rivian realizing, like Elon said, hey, prototypes are easy, production, not so much. So according to Morgan Stanley, the Rivian price hike situation is a sign of the dramatic input cost inflation into EVs. I think that's only part of the story and should serve as a warning to medium-term EV penetration forecasts. Too high, question mark, which may elongate the pace of de-adoption of ICE vehicles. Now, I understand where they're coming from here. Oh, hitting the fan here. Like maybe that means ICE vehicles stick around a little bit longer, but sorry, sunshine, way off the mark. Practically everyone, apart from a few super forecasters like Tony Seba, Kathy Wood, are massively underestimating EV adoption. Even if it were to slow incrementally or significantly from where we are today as a result of the Ukraine-Russia conflict, supply chain challenges and so on, it's still going to happen faster than anyone's expecting. So next, what if the world agrees with Elon Musk and does increase supply of oil and gas to compensate for current supply tightness? Well, most of the world, at least those whose brains work, probably will agree with Elon Musk. I have an extremely high level of confidence that global output of fossil fuels will increase dramatically, at least in the short to medium term, as a direct result of the Russia-Ukraine conflict. Countries realizing, oh, hang on, energy security is important. Russia having us by the balls, not ideal. Let's fix that situation. But this will not be a long-term trend. Why? We already know the cost of sustainable energy generation, usually a combination of solar, wind, and a little bit of hydro plus battery storage, is significantly cheaper than fossil fuel-based sources of energy. So the economics assure this transition is happening. That also includes electric vehicles. By default, an electric vehicle is much safer. Battery in the floor plan, much lower center of gravity, plus no engine in the front, so you have about 3 times as much crumple zone, meaning you're far safer in the event of an accident. This is by default. Even if you suck shit at making EVs, your EV by default will be safer than an ICE vehicle. The same is true of performance. An EV by default, even if you have a terrible powertrain, is going to out-accelerate, outperform, out-torque a traditional ICE vehicle. Total cost of ownership of an EV, even if it sucks, is going to be way better than a comparable ICE vehicle. I could keep going on and on and on and on. It's a done deal. Never mind the fact that battery costs will continue to plummet over time. Never mind that EV costs will continue to plummet too as they're produced at higher scale. There's new innovation in manufacturing and economies of scale really come into play. So I really want to underline this point. The world will increase fossil fuel production as a direct result of the conflict. This won't make a difference to medium or long-term EV adoption, nor will it make any meaningful difference to the adoption of solar, of battery storage, and other forms of renewable energy. Longer term, the systemic issues with ICE-fueled vehicles are on display during this time of geopolitical unrest. If governments and consumers respond to the Ukraine crisis in part by accelerating renewable energy and infrastructure projects, they also will. This can increase the ballast and conviction of penetration assumptions further out on the EV curve, i.e. beyond 2030. This is a fair point, but again, I want to underscore everyone is still massively underestimating everything. Maybe the clowns that think in 2035 we're going to be 50% EVs might think, oh, now it's going to be 55 or 60 instead of 100, which will have occurred years prior to that point. And now Tesla's swinging around their gigantic capabilities and technological dominance. Quote, Tesla already leading US luxury car registrations per Experian data. Tesla's US January 2022 registrations were up a whopping 49% year over year amid a host of constraints. Do you know anything else growing at a rate of 49% per year besides your girlfriend? According to a recent article published by Automotive News, Tesla appears to have taken an early lead in 2022 US luxury car sales. Based on the data, Tesla overtook BMW in January as the leader in the luxury segment. Now this is huge news, okay? We're talking about the entire United States automotive market. When you think luxury car, what names come to mind? Well, in January 2022, Tesla beat them all. And this is before the new factory in Austin starts pumping out hundreds of thousands of Model Ys per year. And I've definitely saved the best till last. Now we get to listen to and enjoy SpaceX trolling Russia on their latest live stream. Seriously. I'll quickly set the scene for those who aren't up to date. Elon Musk replying to a quote from the head of the Russian space program, Dmitry Rogozin, who said, "In a situation like this, we can't supply the United States with our world's best rocket engines. Let them fly on something else. They're broomsticks." I don't know. It's almost as if Dmitry here had a seniors moment and forgot about SpaceX. A few days later, well, this happened.
Time to let the American broomstick fly and hear the sounds of freedom. LD is go for launch.
And that, ladies and gentlemen, is how you tell Russia to suck your American broomstick without actually telling them to suck your American broomstick. Few other companies would have the balls to say on their live stream what SpaceX just did. and I applaud them for the courage. Well, told you guys and girls we had a lot to discuss in today's video. Congratulations on making it all the way through. Don't forget, if you'd like to access my exclusive content on Patreon, check the card in the corner or the link in the pinned comment. Sign up at any support level and you'll instantly gain access to over 100 exclusive Q&As, plus my Tesla stock price targets all the way out over the next 10 years in the bear case, base case, bull case, and the hyper bull case. So, I'll see you over there. I'm Stephen Mark Ryan, this is Solving the Money Problem, and I love you all. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can get 2 free stocks with WeBull, a free stock with Stake, free Bitcoin with Coinbase, and free Bitcoin with BlockFi, and the BlockFi Bitcoin Rewards credit card. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support. And if you're still watching, you're awesome. I read every single comment on this channel and I really appreciate your feedback. So if you've got any thoughts on today's video, questions, comments, or suggestions for a new video, let me know in the comments below. Check the cards on screen now to browse the merch store, join Patreon, or watch the next video.